All right. Hello again, everyone. Again, this is Antonio, and I'm coming at you with another exciting video. In this video, we want to talk about Senseonics. All right. So first of all, let's start off by saying this is not financial advice. This is for entertainment and educational purposes only. Now, let's talk about a stock that just forming a new partnership, and with this new partnership, this may be something that's really a good thing if you want to get into the stock. So let's read this article from InvestorPlace, and it reads: "This significant new partnership makes Senseonics stock worth another look." All right, now SENS used to trade deep in penny stock territory. Shares were below 50 cents through most of 2020. However, Senseonics rocketed to a high of $6 per share during the huge Reddit short squeeze phenomenon back in January. Now, Senseonics or SENS stock has settled back down to around $2 a share. This could offer a better buying opportunity for traders that missed the initial run up. Before we take a look at whether Senseonics worth getting involved in at all, let's back up and take a look at how Senseonics hopes to start making money. All right. So diabetes care and SENS stock. Since Onyx focuses on developing products to help with diabetes care, its lead product, ever since provides continuous glucose monitoring, CGM. It is novel in that it can be implanted and then provide data for up to 6 months. The company describes it as the world's first long term CGM, touting the device accuracy, longevity, and bioanalytics. Getting rid of invasive glucose monitoring is indeed a huge leap forward. That said, there are rivals going after the CGM space as well. Six Onyx is hardly the only firm involved. You can find plenty small medical device companies out there. A lot of companies come up with innovative products but struggle to get them to market. Distribution, not technology, is often the sticking point. This was one of the key reasons why Senseonics stock traded at such a low level as well. Investors worry how Senseonics can make Eversense a commercial success. Okay, however, the company had a huge breakthrough on the front. Instead of trying to build its own marketing outfit, Senseonics made an important partnership with Ascensa Diabetes Care. Ascensa is the offshoot of Bayer's diabetes business and thus is a well-known global operation. Ascensa invested money in Senseonics and is distributing the Eversense line of products in many locals, particularly in Europe. All right, investors paying Senseonics recent quarterly results as earnings and revenues didn't quite live up to Senseonics' recent stock price gains. However, Asensa was rebooting marketing efforts for Eversense in the United States. According to the company's latest conference call, Ascensia has relaunched Eversense in the US recently and hired several dozen employees to get product sales rolling there. All right, let's talk about some risks and let's talk about if this is a stock for you for the future. Eversense is still in the early stages of commercialization. The company anticipates 12 million to 50 million in sales this year. That is dramatically from 2020 levels, but it is still rather modest in the grand scheme of things. Another potential concern is competition. Essentia wouldn't have invested so much time and financial capital in Sensonics if it didn't think the platform was viable. However, Sensonics isn't the only game in town. Other well funded competitors like Abbott, and Dexcom are active in continuous glucose monitoring as well. All right. However, having the backing of a huge player like Senseonics gives Senseonics onto a level playing field. It doesn't guarantee success, but it does give the company a fighting chance. All right. So Senseonics also has a large cash balance. It held 178 million, 0.6 million of its last quarter. This gives time to Essentia to ramp up sales, also for Senseonics to further its research and develop to keep Eversense up to speed with rivals. All right, so let's give a stock verdict and see if this is a stock for you. It'll be easy to miss SENS stock. It's been in business an awfully long time without much to show for it before now. Senseonics rallied with a lot of other low quality meme stocks back in January. There are reasons for cautions are here, and this is still a high risk investment. Our Josh makes a solid case for being wary of SENS stock and is worth reading before investing in capital. My motto is never get in the stock that you haven't read up on in anyways. I wouldn't just take 100% advice from a guy just reading off an article from YouTube, but I do think that if you have time to get into this stock, yes, Reddit did push this stock for a lot of us back in January, but if you got time to get into the stock and do a lot of research, this may be a stock for you to get into for the future. How I would play it is, and I know that my advice is just for educational purposes, but I would say if you're going to get in this stock, be prepared to get into it for possibly a year for this partnership to give it time to manifest and show what they could potentially do for each other. I think that diabetes is a problem for worldwide because it's just a bad thing, and even animals can become diabetic. So my thing is this: get into the stock with caution, but be prepared to get into it and be in it for a long while. $2 is still a good buying cost, but if it ever get back to the $6 range at $2, then you basically triple your money. So I just want to make a quick video. I know some people are saying that this stock can make you rich. I'm not saying that this stock can make you rich, but if you are prepared to be in it for a while, think about it. It started below 50 cents last year in 2020, and now this stock is above $2. So, or it's around $2, I mean to say. So I just want to make a quick video about Senseonics and the new partnership. How, I see the news, I report the news. So basically, please like, comment, and share as I'll be making new videos and such in the future. And I will see you next time.